Welcome. In this video, can Zbcn coin make another top? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. There is an ascending trend structure that is noticeably evident on the chart and creates optimism in the market. This structure is based on a trend line to which the price has reacted positively in the past. The fact that the price reacted strongly upwards after approaching this trend line, especially at the last contact point, clearly shows that this trend is still recognized by the market as a valid, considered, and strong support line. This is a very positive development in terms of technical analysis, and the preservation of this rising structure can be considered as an extremely valuable signal for the continuation of the current trend. Trend lines are one of the most fundamental tools for predicting the direction of price movements and potential turning points. In this context, we have an uptrend, indicating that the price is continuing its upward trend and that buyers are still active in the market. The upward reaction of the price every time it touches this trend line indicates that market participants consider this trend as a strong support area. Therefore, it is of great importance for bullish scenarios that the movements along this trend line continue and the trend is maintained without breaking to the downside. Uptrends indicate that the market is generally in an upward trend. This creates a very positive atmosphere in terms of investor psychology. Buy trades are made more boldly, which leads to increased volume and faster price acceleration. This uptrend structure, which is currently observed on the chart, is also very supportive in this respect. Although the price occasionally corrects from time to time and exhibits short-term downward movements, the respect for the overall trend line remains, and the market immediately reacts positively when it approaches this line. The fact that every time the price touches this rising trend line, buyers step in and manage to move the price upwards shows that the trend is technically very healthy. The important thing in this type of trend structure is that the price approaches the trend line in a controlled manner and reacts upwards after these contacts. This indicates that buying interest is still alive in the market, and the price retains its willingness to move upwards. The absence of any panic selling during these contacts and the clear bounce from support reinforce the strength of the uptrend. If the price continues to move in parallel with this rising trend line and manages to stay above it without breaking the trend line to the downside, this strengthens the potential for the price to move higher. As we often see in technical analysis, controlled moves above trend lines provide clear signs that price is moving in a healthy direction. In this context, the maintenance of the current uptrend sends very positive signals for both short-term and medium-term buying opportunities. The area below this uptrend can also be considered as an area of psychological support. This is because every contact with such trend lines reminds investors of their previous profitable experiences, and therefore they tend to buy again in similar situations. This both increases trading volume and strengthens buyer pressure. In other words, an increase in buying as the trend line is touched reinforces the likelihood that the price will bounce back upwards and the trend will be sustained. From this point of view, such rising trend structures are very valuable and reassuring for market participants. Looking at the current technical structure, it is clear that as long as the price tries to stay above this trend line and sticks to this line, there is no technical obstacle to the uptrend. But we cannot decide the analysis only with trends. Let's look at other metrics. Keep watching. When evaluated within the framework of the Elliott wave theory, we can say that the current price movements are currently in the fourth wave, and the possibility of a fifth wave following this structure is quite strong. The Elliott wave structure is a well-established theory that has been used by investors and analysts for years, recognizing that market psychology proceeds in mathematical and natural rhythms. According to this theory, 5 main impulse waves occur in a bullish direction, while 3 correction waves develop in a bearish direction. In the chart structure currently being analyzed, the price action appears to have completed the third wave, after which it moves sideways or slightly downward for a period of time with a fourth wave correction. Fourth waves are usually considered as a respite phase following the strong and accelerated rise of the previous third wave. This correction allows the market to re-energize and prepare for the fifth wave. From this perspective, the current fourth wave structure is not a sign of weakness, but rather a healthy and natural development process that shows that the market is gathering strength for a new upward wave. It is quite common for fourth waves to be more horizontal and time-consuming in nature. For this reason, it is technically normal and even positive for the price to consolidate for a while or to move sideways within a certain band. The current price structure has exhibited a very strong rally given the character and volume of the third wave in the past. Therefore, The temporary pause in the fourth wave can also be interpreted as a resting phase for buyers after the previous big rally. During this phase, investors evaluate their positions and look for new entry opportunities, paving the way for the market to prepare for a healthy fifth wave. If volumes decline or the price does not show much momentum during this period, this is not a sign of weakness, but rather a positive sign in terms of gathering strength and reducing the pressure on the market. The fifth wave, on the other hand, is usually characterized by investors acting with positive expectations, the trend maturing and the market reaching its peak levels with a final bullish wave. Therefore, the fact that we are currently in the fourth wave suggests that technically one last uptrend may be on the way, and the market is preparing the ground for this move. Horizontal or triangular consolidations in the fourth wave mean that the fifth wave will be built on a healthy foundation. Such horizontal patterns provide traders with a clear direction and are a stable preparation before the fifth wave. Moreover, based on historical data and Elliott wave principles, the fourth wave is mostly a time correction. That is, the price moves sideways over time rather than making a deep retracement. This ensures that the technical space for the fifth wave is preserved and the potential is not lost. This structure is clearly visible in the current chart. The price is holding within a certain band range, reacting with buying as it touches support points, thus creating a strong base. The indecision characteristic of the fourth wave actually gives important signals to investors. Because investors who analyze this phase correctly and believe in the continuation of the trend get the chance to build their positions at the appropriate price before the fifth wave. This horizontal structure, especially after an accelerated rise such as the previous third wave, is a period of opportunity that many professional investors carefully follow and evaluate. From this perspective, the current price behavior should be seen as a harbinger of a new beginning, not an end. The fact that the 200-day exponential moving average, which is often used in technical analysis and is a strong trend indicator, is still positioned at the bottom of the price is a clear sign that the market is continuing its overall uptrend. Such long-term moving averages allow traders to analyze the overall direction of the market in a more reliable way and accurately reveal the trend in the big picture. The fact that the price action is currently hovering above the 200 EMA indicates that the current uptrend is still valid and intact. This is a very positive and promising technical signal for investor confidence. The 200 EMA is an important reference point, especially on large time frames. This level works like a compass for long-term traders in the market, because if the price continues to stay above this line, it usually indicates that the overall structure of the market is positive and bullish expectations are predominant. In the current chart structure, the fact that the price is holding steadily above this important average shows that buyers are dominating the market and bullish pressure is still valid. The 200 EMA shows us long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.